it is expected to be a good quarter both for the oil to chemicals and E&P business for Reliance Industries. Let me start with the oil to chemicals business, where refining will be very strong. There will be some weakness in petchem business, but it will be offset this time. Let's look at some trends now. Singapore GRMs, they are higher on a quarter-on-quarter basis at $9.8 per barrel. But if we look at petchem pricing and margins, that has declined both on a quarter-on-quarter and on a YY basis, which will lead to weakness that we'll see this time. So margins down around 15% on a quarter-on-quarter basis, 23% on a sequential basis. Now, what would that do to EBITDA? EBITDA will still increase, led by refining 4% on a sequential basis, 33% on a YY basis. Refining GRMs are also expected to be higher, and refining throughput expected to go higher by 3% on a YY basis and 1% on a sequential basis. Now, this is about the oil to chemicals business, where 19,888 crore was the recent high, but those were record high margins, and it was a volatile environment as well. The normalized levels were somewhere in Q1 of FY24, and from these levels, there is an expectation of improvement as well. Now, let's talk about the oil and gas business, because the strongest growth is expected in this segment because of high gas production. So this time around, if you look at the EBITDA, a 22% sequential growth and 54% on a YY basis, the best in all the segments. Gas volumes expected to go higher by 19%, and gas pricing has also increased by 7% on a sequential basis and 9% on a YY basis. These are some estimates which are put out by Kotak Institutional Equities. So yes, a good quarter expected in both the segments.